best stocks in the market according to Josh Brown. Today, the spotlight shines on two biotechs. Tell us which ones.
Yeah. So we published this yesterday, and we wanted to do something that had nothing to do with data centers and GPUs, and just take a break from that whole AI CapEx world that we've been living in for so long. And we wanted to talk about stocks that are working away from that. And Insight is the first one we'll talk about. Not only is this name on the best stocks in the market list, it's also in a more selective list. It's in my Porterhouse portfolio, and it's not hard to understand why. When they reported earnings last week, revenue came in at $1.67 billion, adjusted earnings of $309. The estimate for earnings was $2.12. They absolutely crushed. Management raised full-year net sales guidance as well. And basically, this is a company that was thought of as a one-drug company that now has a pipeline with 9 or 10 drugs in different stages of trials, all of which look like they could be huge winners for the company. And that's why you're seeing the guidance increase. So I think this one's pretty simple. Traders can watch that 109 area. That's where the 50-day sits. I would treat it as an alert, not an automatic sell. If I'm a little bit longer term, I'd look at the 200-day around 101. Below $100, the uptrend is over, and you probably want to be trading something else. Above, I think you need to be long this name. Biogen's the other. This is a company that just beat top and bottom line expectations. They have no GPU, Judge, no LMs. This is, believe it or not, a company in the healthcare space, and yet able to put up massive numbers. Earnings came in 18% above consensus. Forward guidance is going higher as well. This is one of the granddaddies of publicly traded biotech stocks. It has knocked on 218 multiple times, has not broken through. I think we're going to make another attempt at 218, a clean close above that level. This stock is in a bona fide breakout. Traders can use 190 as support. Investors can anchor to the 200-day at 183. Again, look at these trends. Above those levels, I think you'd rather be long than out. And both of these names, I think, can continue to work based on not only the portfolios of drugs and the catalysts, but just the fact that these stocks are under accumulation, once again, away from tech, away from hyperscalers, but putting up big numbers and bringing in new shareholders.
You have Insight.
Yes. But we purchased Insight in October at $93, recognizing the building momentum. Quality company, $24 billion market cap. The thing that I really appreciate about the recent performance and the earnings report is I don't think the analyst community has embraced this stock. Only 44% of the analyst community have a buy rating on it with a 12-month price target of 128. That's a great setup for me. I like that. People are looking in the other direction, not realizing what Josh is identifying and what the ETF purchased in October.
Barron's talking about biotech today. They say more biotech M&As coming, whether the AstraZeneca-Bristol deal happens or not, which was much talked about, obviously, yesterday and speculated upon based on some reporting. So you own AstraZeneca. As we also note that healthcare was the best performing sector of the past 3 months. Wolf suggests that a consolidation was inevitable. Mm-hmm. Was this a pause that resets and then reignites?
I'd like to think so, because I've got a lot of pharmaceutical and biotech exposure. And I think the AstraZeneca deal would be good. I'm clearly in the minority in that opinion, given how the stock reacted yesterday. But I think you buy a stock in Bristol Myers that's exceptionally cheap, good dividend yield, and there actually is a pipeline. Granted, it's going to take a few years to develop, but there is a good pipeline out there, particularly in cardiovascular, which complements things that AstraZeneca has going, particularly oncology. I think it's a great tie-up, actually.
Robbie, you have Amgen and Gilead. They both report after the bell today.
Yeah, and I mean, these companies have dominant franchises in various things. I think the exciting thing about Amgen is that they're entering the GLP-1 space, and there could be some upside there. They're one of the best pipelines in the business. They're not expensive, pay a 3% dividend yield. Gilead's kind of an ignored company. I mean, it's up 8% year to date, but it trades at 16 times, has one of the best oncology franchises out there. And obviously, Biktarvy is the main HIV treatment that's out there. So,
what about Lilly for tomorrow, before the bell, which you have too?
Yes.
One of the larger market cap names within the healthcare orbit.
Has certainly cheapened quite a bit since its peak pricing. It was trading upwards of 50 times. It's down in the low 30s now. We expect, north of 30% revenue growth, 50% growth in their obesity platform, which is dominant. And so, I think they're going to get approval on some of their further drugs soon, which could lead to a catalyzer to even further upside in that franchise.
There's a lot going on in this space today. Give me Merck, guys, please. They lifted their sales forecast. There's no direct ownership on the desk, but the CEO is going to be on Mad Money with Jim tonight to talk about the quarter. Stock's up 1 1/3%. Again, I said they lifted their sales forecast on the strength of newer drugs. You'll hear from the CEO this evening with Jim. Pfizer was a beat. Vertex raised their annual forecast. You want to take Vertex?
Vertex we just purchased. We now have an 11.7% weighting to healthcare, continuing to increase. Eli Lilly, that's a must-own, $1 trillion, basically biotech company. It's the anchor of ownership in healthcare and really dominant over Novo Nordisk and gaining significant market share. Also added Quest Diagnostics and Humana, 2 other names to think about, along with existing positions like Rob mentioned already. We already own Amgen.